Yeah. What's up guys, Brandon here. Long time I haven't done a video like this. So let's take a look at some of the things I want to discuss today. Let's go. Remember when you were a kid and you used to play throw a ball? You ever throw a ball at you and you end up missing the ball? Yeah. You realize all you have to do at that point is just pick up the ball and then throw it again and then try again, right? It's not the same when you miss the ball. It doesn't really make a difference, right? You just do it again. What if you knew you couldn't catch the ball but still try to catch it in any event? Yeah. Basically, you've just done what is a cardinal sin, in my opinion, in trading. If you know you shouldn't be taking the trade, don't try to take it. A missed trade is better than a lost trade. And that's something I try to live by. If I'm not seeing my entry, or I don't think that it is safe for me to take the trade, I'm not going to take it. I prefer to miss it, right? As opposed to, if you know you can't catch the ball, don't try to catch it. Just leave it, right? But if you can catch it, try it, and if you miss it, you miss it. It's fine. Let's hop into my computer and showcase two scenarios in which I am explaining this in the trade itself, or in the market, in the structure, on the chart itself, so you can understand. I was right. I was right about two scenarios, and guess what? I missed them both. I know I could have probably taken a chance, but the idea is I rather miss the trade than lose the trades altogether. So let's go into my computer and take a look. So what we're going to be talking about today is missed trades. We're going to be taking a look at two trades in particular that I would have been watching. One I would have been watching for a matter of weeks, and the other I would have been watching last night. And I missed both of them, therefore I didn't get to take anything last night, but both of them would have absolutely been correct. And the interesting thing is, a missed trade is better than a lost trade, right? So I want to first take a look at GBP/USD. So GBP/USD, I'm going to go on the 1 hour just to show you the bigger picture. GBP/USD is absolutely beautiful in its big bearish momentum. There are many different things that are telling us right now that GBP/USD is overall bearish, right? And that's absolutely beautiful. That's everything about GBP/USD says bears. Now, what's interesting about GU is GU actually started to create something that I call a support trap, right? What is a support trap? A support trap is anywhere that the masses will be accumulating to try to possibly buy based off of what they perceive as support. Now, as you know, most of you may know this, support is the low or the floor of price action, and it is believed that support, once price is on a support level or a demand level, basically it will not go lower. That is what they believe, right? Garbage if you ask me, but that's what they believe. And you can see here, 1, 2, 3, 4, 5, 6, 7, 8, 9 times price hit this support level or demand level. It's even at a key level. Interesting, eh? It's even at a key level where it is 30,000, 1.3, right? It's at a key level. Now, the interesting thing about this is at no point in time was I considering buys on GU. None. I even had a sell buyer somewhere in here. I can't remember where it was. And I took the trade and I lost it, right? One of my students even said potential buys, and I said, no, I disagree. And I might show what I was talking about. I said, no, I disagree, sells. Because again, the whole idea is, if you listen to my rules, right? Listen, I want you all to understand something. The rules will guide you, eh? If you listen to my rules, the rules say, do not go against the momentum unless a reversal is clear, right? If a reversal is clear, then the first ECR after the reversal is the valid one, right? But in this case, what do we denote as a potential reversal? A W pattern at the end of a bear trend, an M pattern at the end of a bull trend. Do we have that here? No, we do not. I've never seen anybody draw a W like this. Never. I have never seen anybody draw a W like this. Never, ever. You can imagine somebody writing the word water, right? I always use this when I'm teaching students. Could you imagine somebody writing the word water, right? like this. W A T E is stupid. It's very stupid because the idea is when we say W pattern, we mean W, right? Two distinct lows. That's what we want. And if you do not see that, then automatically it is no longer a W. It is now a possible continuation. And that has been denoted by the fact that it's overall bearish. It's not a clear reversal. Don't go against the momentum. Now, the next thing obviously is you wait for the top of the next trend line and then the cross of your EMAs, and that's it. There you go. You have your top tier trend line, cross of your EMAs, and let me see. Did I have the opportunity to sell it? No, I did not. Because as you would have realized, well, for those of you who do not know my entry style, this would be very confusing because you'll say, well, yes, there's a cross, but no, I'm entering on very specific candles. And this would have happened on Friday, I believe. No, Thursday, right? And I think I was still in CDJ, guys. So I had no need to enter a new trade. But I never got the entry in the first place. Therefore, I missed this entire thing completely, right? But I want you to pay attention to something here. Let's just assume that because my entry would typically be around this area based on how the EMAs cross the trend line bar. It would typically be around this area. Assuming I did get my entry, GU proceeded to drop over 330 pips in my favor because I have been anticipating sells on GU for weeks, right? For literal weeks. You know what's interesting about this? What's interesting about this is anybody who was buying here, right? Let's just say they were buying off of this key level here, buying off of this support level here, buying off of this demand level here, buying because of garbage support and resistance concepts that everybody uses, 90% of traders use, right? Anybody who is buying here, right? If you had a stop loss, a 50 pip stop, you'll be taken out. A 100 pip stop, you'll be taken out. A 150 pip stop, you'll be taken out. 200 pips, you'll be taken out. 300 pips, you'll be taken out, right? Would you? You'll be in almost 300 pips of drawdown right now. And this is for the people who use stop losses, right? Now, obviously for me, I'm not saying that I don't lose trades, but if I'm losing, that's how much I'm losing, which is 10. But what about the people who use 50 pip stops, 80 pip stops, 100 pip stops? You'll be stopped out. And now you have to recover from not a losing trade. You have to recover from a losing trade that did 100 pips against you. In order for you to make just 1 to 2, if you have a 100 pip stop, the trade needs to go 200 pips in your favor. In order for me to get 1 to 2, the trade needs to go 20 pips in my favor. So even though I miss the trade, it doesn't really matter to me. Now let's talk about the people who don't use stop losses. Anybody who does not use a stop loss would now be in about 290 pips. Let's just say right now floating at 275 pips of drawdown. I want you to think about this. I want you to think about this logically. The average lot size that any trader uses when they first begin to trade is 1 standard lot. Whether they know what 1 standard lot means or not, that once their account is allowed to use 1 standard lot by virtue of their leverage and their margin and all of these things, most traders just open a trade with 1 standard because they don't know how to adjust the lot size. Now, assuming you are a new trader and you learn to trade support resistance, and you decide to open a trade on support here, right? Support, because support, right? With 1 standard lot, and you decide to use no stop loss, this trade is now $2,730 against you, floating in a loss right now. Am I wrong or am I right about that calculation? Think about what I'm telling you. $2,730 against you, floating in a loss right now because you're using a 1 standard lot. Now imagine that you have, let's just say you have a $5,000 account. That's more than half of the account. Let's assume that you do not have a $5,000 account. Let's assume that you had $2,000 in your account. It's blown. $1,000, it's blown. $500, it's blown. All because you're not understanding obvious directional metrics, right? And then you're not using proper risk management. And then you're basically not closing the trade when it's losing. And all of these different things are going against you. One like me, I was right about the trade and I didn't get in because I didn't have the entry. I was absolutely right about it, right? But I didn't get in because I did not have an entry. Meanwhile, on the flip side of things, people are rushing to buy because of support. Doesn't make sense. So that's GU. Let's talk about the next one, which is gold. This is a second example of me being right, me being absolutely right about the direction, right? Me being absolutely right about the direction and telling people, you know what, don't take it yet. I even have, look, I have a trend line drawn here. Telling people don't take it yet because we don't have an entry. A missed trade is better than a lost trade, right? I think I'm going to put this on YouTube, and that is the title of the video. A missed trade is better than a lost trade. The idea, the concept, the belief behind what I do is I rather miss the trade completely than lose the trade because I did not get my particular rules and I still proceeded to enter, despite me not getting my entry rules. That's gambling. You're not seeing what you want to see, but you're still entering. Come on. Come on. Right? Let's just say you decide, let me give you a parallel. You decide it's time for you to buy a new car, right? It's time for you to buy a brand new car, right? You want to sell your old car and you want to buy a new car. And you know when you're looking for a new car, you have kids, young kids, so you're looking for safety aspects, right? Airbags, proper seat belts, all of the safety metrics, right? Crumple zones in the chassis and all of that. You want all of the safety metrics. And you go to buy this new car and the sales rep, the salesman, the car salesman tells you that, yeah, this car don't have none of that, but it looks pretty good. Would you buy the car? No, you would not buy the car because it does not meet your requirements. That is the whole idea behind the way that we trade. If the trade does not meet your requirements, then do not take it, despite the fact that it might look good. Looks can fade. People can bounce your car, scrape your car, key your car. Looks can fade. Anything can happen. You want to make sure that there are certain metrics and rules being met when you are looking to take the trade, when you're looking to buy the car. And if you realize I'm making a parallel, I'm making a link between taking a trade and buying a car, right? That is the whole idea. A missed trade is better than a lost trade. I was absolutely right about gold. I called gold about 90 when it was at 1930. If anybody's in the analysis channel, I might put it up on the screen here now, right? Around the time that I said this, it was around this time of the day, right? But last night, it was around this time where I said gold possible sells. And you know something? I then came back in very quickly and was like, disregard it for now because it's not painting my entry. If I caught my entry, this would have given me ultimately about 400 pips. It would be floating right now at 335 pips, assuming I got my entry, right? But I didn't get the entry and thus the 10 pip stop loss would not have been safe and thus I did not take it. Imagine being right about 2 trades, both trades going over 300 pips each, and I didn't get any. And the lesson that I want to bring here today, right, is, does it sound like there's frustration in my voice? Does it sound like there's anguish and you know, depression in my voice? Does it sound like I'm ready to walk off of a building because I'm so sad and depressed that I didn't get the trade? No. The idea is if you don't get it, move on. There will be other trades. But you want to make sure that when you are looking for the trade, you go and get exactly what it is you're looking for. You don't walk into a store looking for a pair of jeans and then you end up buying a shorts instead because they didn't have the jeans you wanted. You're going and looking for the jeans, get the jeans. Yeah? That's just how I look at it. That's the way I approach, you know, the trading industry, right? And like I said, I am going to post this on YouTube. So if you're seeing this on YouTube, you know what to do. Leave a like, comment if it is you agree or disagree with this. And you know how it goes. Be sure to subscribe, ring the bell. And you know you can always message me at EkataTrading for any advice, questions, info, etc., etc. Right? And I will see you all in the next one.